What's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ. And without further ado, let's go ahead and hop into the video. Guys, as you get ready to come on in, we're looking at the investing account right now, sitting at $75,782.78. We're down on today so far, $72.69, which is only 0.10% of the portfolio. In the buying power right now, we got $17,776.17. I do want you guys to understand that the money that's in your buying power, I know a lot of you guys are new to investing, and so I'm going to kind of break down some things to you. But the money that's in your buying power is also the money that you can use to pay bills, go out to eat with, buy furniture for your house, apartment, whatever it is that you need to do. That's what that money's for. But you got to switch it over to the spending account, of course. But for me and for other investors, that buying power is also the money that you have available to invest in your next investment. So if you want to sell options, if you want to buy options, or if you just want to flat out own stocks and ETFs, that buying power is the money that you will use in order to do that. All right, just want to get that out the way. And just like that, we just turned green. We was down a little bit today, but now we're up a little bit today. $2.99, just like that, right back down. Anyway, the market fluctuates. It is what it is. We got some crypto holdings, Doge, Ethereum, Avalanche, now stocks and ETLs. Before I get into the stocks and ETLs, I just want to remind you guys what was going on. Today is Tuesday, but come Monday, which was yesterday, for whatever reason, Amazon, AWS, model services had some type of disruption. And since they have such a big ecosystem as far as the servers and all the different platforms that use their internet cloud system, cloud-based revenue system and all that stuff, Robinhood was one of the companies. Unfortunately, Robinhood was one of the companies affected, and we couldn't get the recording like we wanted to yesterday. Because yesterday I wanted to bring you guys a recording about about how I made passive income monthly. Basically, I was going to show you guys exactly in that video how to generate about $6,000 to $7,000 a month with passive income with the portfolio size that I have right now. I also know how to generate about $10,000 a month. That is coming because, like I said, the bigger the portfolio size, the more you'll be able to generate per month. But I also can show you guys exactly by taking the portfolio size that I already have and, also generating that money. Now, it would have been between both accounts, the investing account and the traditional IRA. Right here in the traditional IRA, when I switch over, I got $54,933, which is like a retirement account. In the buying power, I got $22,432. So total collectively in buying power, I have over $40,000 right now sitting on the sidelines, and I can do or choose to do what I will with that money. But like I said, I like my money compounding, making more money for me. So I'll probably put that money back to work as soon as I can. But yeah, I was going to make a video yesterday about showing you guys step by step what stocks I select, calls and puts I decide to run, how I make monthly income so you don't have to wake up in the morning and go straight to work. If you go to work, if you want to go to work, and that's what I've been doing for a long time. I've been working for a while, for a long time. Also been selling options, making that active extra income, passive income and active income, making them both at the same time until now I'm at a place where my passive income can actually subside. And I mean, not subside, but it can actually sustain. That's what the word I'm looking for. It can sustain me, my lifestyle, my family, and everything that we got going on passively. And tax implications are different for different types of income sources. Active income is tax heavier, harder than passive income. Long term is tax easier than short term income. So you guys, it's just, I'm not a financial advisor. I don't have a Series 6 or Series 7, so I can't tell you guys what to do. All I know is that I'm a guy on YouTube with a channel, with an investing account that's been doing this for a hot minute and has been able to build a 6-figure portfolio, on the road to 7-figure portfolios right now. So that's exactly what we're here to do. Right now, I'm looking at our stocks and ETLs. We got Apple up to $263. Now, the thing about Apple, which I was going to sell off yesterday in the video to show you guys how to raise capital, but the thing about Apple I just read about is Apple new price target is, I believe, $315 or $325. That's Apple's new price target. Um, that they just got upgraded to because of the iPhone 17 demand. And so if Apple is set to go to 300 and anything over 300, then guys, my cost basis is only 175.21. I would be up double by holding on to my shares for now. And that's exactly what I feel like I'm going to do until I get ready to like I said, until I get ready to sell these option contracts and show you guys exactly what I'm trying to do. We still got 115 shares of Walmart, and we're going to continue growing this position. Walmart brings me more returns than the S&P 500, and it's even like it's like a stabilizer in the portfolio. Walmart doesn't go up much. It doesn't go down much. It has grew from the past. I've just been holding it long term. I got 115 shares, and I'm always just dollar cost averaged into it. My average cost is $59.43. Market value $12,342.43. It's 21% of my portfolio, and right now I have a total return of $5,486.87, which is an 80% return on this investment in Walmart. I've been holding it for a while, over some years now. So, like I said, big stabilizer in the portfolio, 21% of the portfolio, and it brings in a nice dividend. So I'm going to continue holding Walmart, going to continue adding to it weekly or monthly whenever I'm getting income. I'm going to continue dollar cost averaging into Walmart, building up that 200 share position. And who knows, man, I might take it. I might get 500 shares. I might get 1,000. Walmart is a really, really strong, good company to have in my portfolio. I can't tell you what you need to do, but for me, I like companies that I can rely on. I can go to sleep at night. I know they're going to run. I know that they're going to make profit. And Walmart is just one of those companies. I used to work for the company for 8 years, so I know exactly how they operate, how they run. So for me, it's a no-brainer. Keep Walmart in the portfolio. Next stock I want to talk about is SoFi. SoFi Technologies they jumped on the rocket ship yesterday, almost at the end of business yesterday. By the time the AWS server did get worked out and the everything got back on track, Robinhood, you was able to see Robinhood again. SoFi had took off to over $28 a share. Guys, I've been talking to you and telling you about this one stock right here, SoFi Technologies. I was saying, hey, load up on as much of it as you can is what I'm telling myself and my community. Hey, load up on SoFi. Now, like I said, I can't tell you guys what to do. I'm just a guy on YouTube, but that's what I was telling me and mines personally. That's what I've been telling us. Load up on this because I know this stock had room to run. And I'm so glad I did. I got 500 shares of SoFi right here. My market value, however, is $14,370. My average cost is $23.53. So I was buying this thing around the $23 and the $22 mark. Like I said, because I bought it 5 different times, and every time that I bought it, I bought 100 shares at least. So I got 500 shares, so I bought it 5 different times. Total return, I'm up over $2,600, which is 22% return right now. This is a 24.70% of my portfolio. Not bad. Almost one fourth of the portfolio just in this one stock. And guys, I'm not even gonna hold you. I'm seriously considering adding more positions. And you guys already know I've been selling puts. I've been selling options on this stock since 4, 5, 6 months ago. And I've been trying to increase my position in SoFi. Not only do I want 500 shares, I want 5,000 shares if I can get it. SoFi is such a great company. The business model, they have learned how to advertise to get returning customers, not only returning customers, but these customers come in, they set up loans with these people, credit cards with these people, they set up mortgages with these people, they set up car payments with these people. And before you know it, you don't got your student loan, you got credit cards, you got your new car payment, and you got your house 30-year mortgage with this company all in one. And SoFi, before you know it, when you're 18 to 90, SoFi been dealing business with you the whole time. And they're finna introduce level 1 option trading on their platform. Yeah, it's a no-brainer to me. This stock is a $30, $40, $50 stock easily. And I've been trying to load up on it as much as possible. And I'm going to continue selling options on this stock in order to bring in more revenue, in order to acquire more shares, because I don't mind owning more SoFi. It's just a stock that I don't mind having. Excuse me. Now, one stock that I am looking forward to doing what it's going to do is NVIDIA. NVIDIA right now is $181 a share, 60 cents. All right. And right now it's down on today, but don't let that fool you. I got 39 shares in this portfolio, which is a market value of $7,127. And it keeps moving. I'm up total return. I'm up 24.78 in the position. That's 53%. Guys, this is a 53% return. And the average cost is only 118. Now, look, like I said, 39 shares right here. But when I go to the traditional IRA, we got NVIDIA right here. And I have 126.12 shares right here. Market value, $22,910. Average cost, $109.99. Guys, we're up over $9,000 in the position total, and that's a 65% return. NVIDIA is going to continue dominating the AI infrastructure. They're going to continue. I hear a lot of investors talking about the gold rush, the picks and shovels to the gold rush. This company, in my opinion, NVIDIA, they provide the picks, they provide the shovels, and they provide the gold for the gold rush. NVIDIA isn't just writing another code for CPUs and GPUs, and they're not just providing different players for the AI world. NVIDIA is AI. I'm going to say that again. To me, NVIDIA is AI. They're not just the leader in the sector, but they are the ones who's providing all of the sector. NVIDIA have hyperscalers eating out the palm of their hands. I'm talking about Apple. I'm talking about Google, which is Alphabet, Meta, Tesla. You name it, hyperscalers, Oracle, these companies with big bank accounts are feeding NVIDIA. They are going to NVIDIA with a whole bunch of cash because they need these GPU chips. They need these microchips, and they need the Rubin. The Rubin is the newest thing that's coming. It's like taking a 2-lane road, one-way 2-lane road and making it an 8-lane highway. That's what it is. It is making it so much bigger. The traffic can run so much smoother, so much more efficient, and so much better. And that's what the Rubin is going to do compared to other microchips that you may be used to in your laptops and cell phones and tablets and iPads and things like that. So NVIDIA is the company that is responsible for all of this, and the speed of this technology is just unreal. I'm gonna hold my position in NVIDIA. I had stopped trying to add to it, but at this point, it's a good stock. It's a good, strong stock. It's got a really good moat. It got a great PE ratio. I'm actually thinking about selling more options on it, guys, to be honest. I don't really use NVIDIA for income, for passive income. I use NVIDIA to scale my portfolio. Now, there are certain stocks I use for this monthly income, so it can replace my 9 to 5, which it has. But I also have stocks in my portfolio that I strictly use to scale and to compound wealth. And I know it get me from 100K to 500K to $1 million. And NVIDIA is one of those companies, guys, that I strap my financial strengths to. And I know that this is one of those companies that takes my wealth to the next level. NVIDIA is one of those key players. Excuse me. Next up, I want to talk about Palantir Technology. Lately, Palantir, which is right at $181.24. Excuse me, guys, I got to clear my throat. Palantir has been moving sideways here lately. We have our earnings report coming up. As you can see, Q3 earnings coming up. As a matter of fact, let's scroll and see when is it reporting. November 3rd. And every single time in the last 4 quarters, when Palantir has brought earnings, they have beat expectation. Palantir, and just like the rest of the times it did in 12 days away, I'm expecting Palantir to do the same thing again. Palantir PE ratio is very expensive. It was over, oh, wow. I'm about to say it was over 500. It's over 600. PE ratio is at 603.49, which is very expensive. To anybody else, that'll look like a problem. But to me, I don't think that's a problem. I actually bought more Palantir. I bought more Palantir because I believe in the company, and the structure of it is just fantastic. They have a great moat. They don't have that much competition, if any competition, and they keep securing these government contracts like candy, taking candy from a baby. That's what it is, man. Palantir has so much potential to keep running up. Alex Karp, the CEO of Palantir, I mean, a fantastic guy, fantastic business model, a great mindset. Palantir has been trading sideways for the longest at 181. Has it lost momentum? I think it lost a little bit of momentum because, like I said, it's not growing like a bean sprout like it was earlier this year. So if you missed out on some of the growth, then I'm sorry. But for me, in my portfolio, my total return, I'm up over $2,800 in the position, and I only have 36 shares. And I know my average cost looked like 103.63, but you guys got to understand, I bought most of my shares on the latter half of this transition. I've already had Palantir at $75 a share. I've had Palantir earlier. So that's why my total return is up so great. I've had Palantir $60 a share. I had Palantir at $75 a share. It's at $103 a share because I added more shares, and Palantir is expensive now. So it's all good. I keep selling puts on Palantir every month, collecting that income. Last month, Palantir paid me about $490. That's almost $500 worth of income just off of one stock, just for selling puts on it. I didn't get assigned, and I was actually trying to get assigned on Palantir. I've been trying to get assigned on Palantir for the last 5 months. I would love to have 100 shares, 200 shares of Palantir, but not at these prices, not at this level. Now I just want to collect my income. I might just trim some of that profit off the table and take, off the top, take some of my profit out of Palantir. But anyway, there are some of the stocks that I'm looking at this week, guys. Archer still doing 815 shares of Archer. I sold 180 something shares of Archer, so I could just get some of the money off the top. I mean, guys, I'm telling you, if you just let profit sit for too long, then you can lose easily. And I'm not in the business of letting profit just sit there. I took like $2,200 off the top of Archer. That's a tongue twister. But right now you see total return, I'm still up over $1,500 in the position, 18% return, 815 shares. My market value is still $9,720 something dollars. Average cost $10.07. Archer Aviation is $11.91. If you notice, I don't have any covered calls against this position right now like I did before because Archer began to run. Anytime you sell covered calls, you're going to cap off your potential of increase. You're going to cap it off of gains. You don't want to cap your gains. So right now, if Archer's going to go up to $14 a share like it did this past month, but it didn't stay there, it went up. If it want to do that, and my average basis cost is $10 and it went up to $4, guys, that's $14. That's an extra $4 per share, and I had 1,000 shares. That was $4,000 made easily. And I let it get away from me because I was tied up in a contract, in a covered call contract. And so that's why I said this time I'm not not yet anyway. I'm not gonna cap my games with Archer. I'm gonna see what it do. If it mess around and run again, $13, $14 a share, I'm definitely gonna take some profits off the table, because like I said, what's the point of making all that good money and you let the profit slip away from you? I'm not gonna do that. Also, guys, I know you guys expect, like I said yesterday, I was expecting to do the video where I show you guys how to create this income, even though I was going to do it yesterday, and I'll be locked in for like 30 days to 45 days through option trading. I didn't get a chance to do it yesterday because of the Amazon server was down, and that caused Robinhood to be down and stuff like that. And you probably wondering, well, KJ, why you didn't show us in this video the strategies? Well, this the thing. I also remember and found out yesterday that November 1st, 47 supposed to have 100% tariffs on China. That's right. I'm gonna say that again. 47 supposed to be putting out 100% tariffs on China. So if he decides to do this, the market, in my opinion, is gonna be a bloodbath. The market is gonna be red, all red. And what's gonna happen? What's the best time to buy? Is when everything goes red. And if everything goes red, I don't want my money that's supposed to be loose as a goose in the buying power. I don't want to be tied up in contracts and in stocks that is gonna fluctuate because of the tariff talk. You know what I'm saying? If he want to sit here and do all that, I want more certainty in the market. I want to know if he's going to put these tariffs on China and everything's going to go into the red. Guess what? I'm stepping in. I'm going to have $40,000, $50,000 cash on the sidelines, and I'm going to step in and I'm going to be buying. I'm going to be buying at that point, because when things go back to normal and those prices go back up, I'm going to make a slew of money because I'm going to sell. That's a classic buy low, sell high situation, guys. And then I will resume back selling monthly options. But when you have special times that pop up, like, and I'm not saying everything is pretty in rainbows, but what I'm saying is special times. Special could be good, special can be bad. But what I mean by special times is anytime something happens that puts a lot of volatility into the market. 2020, we had a pandemic. Back at when 47 first got in office, Liberation Day, April 2nd, he introduced the tariffs. Guess what? Everything sold off and went into the red. These are the moments where millionaires are made. These are the moments where the stocks drop 40%, 50%, whatever, and they drop. And those are the times you come in, because you've been a smart investor, and you come in off the sideline and you put in $12,000 into this stock, $14,000 into that stock, $16,000 into this ETF. You do these things at the lows, so when they recover and they recoup, guess what? You just made another $30,000, $40,000, $50,000 for on top of the year. Exactly. Year to date, we're up 18%, 18.96%. Year to date, traditional rate, year to date, we're up another 26.27% right here, year to date. And guys, we got to remember, I wasn't always doing option trading this whole year. I only started option trading back in April, really learning what to do. Really, back in May was when I really was like capitalizing on my trades back in May. So you guys, it's all a learning. It's all a learning situation. It's all a learning situation. It's all good too. Right now we're at 130K, 131K right now. And like I said, guys, it would be higher, but I just took out $4,500 out this account. So I'm living, guys. I'm living. I'm not, you can't take this money with you. You can't just make it your God either. I trust my Lord and Savior. I trust Jesus. I trust the Holy Spirit. I trust God. But at the end of the day, we need money here on earth to be able to live. And you can't take this stuff with you. So you got to make it while you can and be smart with it. Like I said, news supposed to be November the 1st. I'm going to wait around to see what 47 do. Because on November 1st, supposed to be 100% tariffs on China. We'll see. If it does happen, I'll be ready for it. I'll be ready for the pullback because I have money to the sideline getting ready. But if not, I'm still invested now, y'all. Y'all still see my portfolio. Don't think I'm not invested. I still have Apple, Walmart, Nvidia, Sweet Greens, SoFi, iBit, Archer. I still have my stocks now. Don't think I don't. I sold off Meta. I sold off Google. I sold off a couple of other companies to free up more liquidate the portfolio a little bit more so I can do more option selling. But hey, I'm still investing in the market. Like I said, I'm still got Nvidia. I still got MicroStrategy. And I still got Palantir. By the way, this MicroStrategy position, I'm just waiting for this to regain some of its gains. I'm up right now 6%, 176. Earlier this year, this thing was up. Let me see. 3 months ago, man, this thing was up $400, $414. Look at that, $412. This thing was up. I'm just trying to see if it's gonna do what it's gonna do again. Kind of get back up to that spot before I sell it. I could sell it now, liquidate the position a little bit. That's over $2,000, almost $3,000 right there. Oh yeah, I'll wait. I definitely wait till that gets back above 3,000. Yeah, and before I sell. But yeah, I mean, you gotta have a strategy and a mindset to build wealth. You gotta be smart, man, because on the other side of these trades that we do, you got Wall Street analysts, investors, and Wall Street people that have been doing this thing 20, 30, 40, 50 years who's trying to take your money. That's what they're doing. They're trying to take your money. So you got to be smart in what you do. Got to read the signs, read the market, read the charts, man. Be smart about this thing. This is KJ the Investor signing off. If you got any comments, questions, concerns, drop it down below in the comment box below. And I'm going to see you guys next time. Peace.